The pump happening now is a short squeeze. Yes and no, right? So the short squeezes tend to happen with small altcoins. The smaller the altcoin, the smaller the market cap, the smaller the liquidity, the less trading volume there is, the easier it becomes for the market makers to manipulate the price up. If an asset tends to long-term go down and more retail investors are betting on falling prices and it becomes a popular trade, then it's dangerous, right? So we do not want to just follow the popular trades. We always want to make the trade that the masses are not doing. If many people are betting on falling prices, then we see short squeezes. Then we see market makers buying up the supply on the spot market and liquidating all of those shorts and pushing up the price. Now, when I see a comment like this, right, the pump happening now is a short squeeze. This can be true for some smaller altcoins that are pumping much more. Let's say Polkadot, right? Polkadot tended to go down very long term. And so that's maybe one of the reasons why it's rallying more than the average. But for, say, Bitcoin itself, we probably don't see that many short squeezes because it's impossible for a single market maker to manipulate Bitcoin. It's simply too big. And there's easier assets to manipulate and make some money with. So I believe when there is a rally, say, in Bitcoin, in Ethereum, and in the general market, that this is simply just a counter rally when a lot of sales have been made, that some people are taking advantage and buy the bottom. But when we see 50, 60, 70, maybe hundreds of percent of appreciation in just a few hours in an altcoin, that's then a short squeeze. So we have to differentiate here, right? A short squeeze looks very different to a counter rally. Again, we've just looked at Luna, and those are classical short squeezes. We go up very, very quickly and then we sell off over a longer period of time. That's then when the market makers, after they've liquidated everybody, tend to sell off. And we want to, of course, enter a short after a squeeze like this. That's always the best timing. We look at assets that tend to long-term go down. We want to bet on falling prices of those, and ideally we wait for a short squeeze in order to enter those kinds of positions. That's true for Luna, that's true for Polkadot, it's true for many of those assets, right? So I've been talking about Polkadot. Here's Polkadot, the best performer, plus 35% in the last 24 hours. And it is very impressive. It did go up by 36% since the bottom here, right? Since the beginning of yesterday. But the long-term trend dominance is very clear. It's just going down all the time. We should be betting on falling prices. And this is just a squeeze, right? When a lot of people bet on falling prices, the counter rallies, or the short squeezes rather, they tend to be more severe. So yeah, the Bitcoin Treasury Company balance continues to go up. The Bitcoin ETF balance stays stable. It's not Wall Street that's selling here during this bear market. It is the long-term holders that started the selling, and now it's a deleveraging through the perpetual futures and a capitulation event by the miners. That's fundamentally what I think is going on here. People were withdrawing their stablecoins for fiat currencies. So that's what this chart is showing, right? When this is going down, people are moving from the crypto ecosystem to traditional finance. When this is going up, then people are depositing their hard-earned fiat to, say, a centralized exchange. The centralized exchange then sends those stablecoins, or those fiat currency rather, sends it over to a stablecoin custodian. The stablecoin custodian then issues the tokens on the chain, right? So the stablecoin custodian, like Tether, owns the dollars in a bank account, buys maybe some government bonds with it, and at the same time issues the stablecoin on chain. So when the stablecoin market cap is going down, people are exiting the ecosystem. When the stablecoin market cap is going up, people are entering the crypto ecosystem. That's fundamentally what this chart shows. And of course, it has quite a bit of correlation with the general crypto price development as well, right? When money flows into the market, that's good for crypto prices. Now, what's interesting with this chart is, first of all, it has very little volatility. The trends are quite clear. But secondly, since October of last year, we do not see any growth anymore in the stablecoin market cap. So since October of last year, we do not see any inflows into the market. No people are depositing their hard-earned fiat into crypto, at least net, right? There's the same amount of people depositing versus withdrawing. And that, of course, has an impact, right? When you look at Bitcoin at the same time. So let's plot this below as a comparison here. Bitcoin versus the US dollar. And let's make this also in orange and a bit more visible. And we check, when did the stablecoin market cap not expand anymore? Since this point in time. Since then, we tended to see lower prices. Right, we tended to see Bitcoin going down. This is when for the very first time we saw not just 25% or a 30% correction. This is when the correction got way more serious. So if money was still flowing into the space, then those corrections wouldn't be as bad. But because the inflows has stopped, the bear market is able to properly develop. And I just like to look at metrics like this, right? When there's no money coming in, that's a problem. Now, when Terra Luna today goes up or doesn't go up, I'm not really interested in that, because the issue is that Terra Luna is by no means as important as it used to be. And there's still a bit of supply held by the market makers, by the centralized exchanges, and they might every now and then pump the Luna price. And that might make sense then to potentially use as a short opportunity. So when we look at Luna, let's have a look at whether or not it makes sense to now short the Luna token. When we look at Luna relative to the others market cap, it's actually not doing much, but we can see every now and then, right? Because people are betting on falling prices, because Luna tends to underperform the general market. Every now and then we see a short squeeze, right? We see how the market makers push up the price, and then once the short speculators got liquidated, then they sell off their holdings. That's true for the regular Luna token. That's also true for Luna Classic. Here is Luna Classic, right? It tends to long term go down, but every now and then we get these short squeezes, and those are the opportunities to then potentially enter for short positions, right? When we go relative valuation short, we go short Luna and maybe long Bitcoin. Short squeezes tend to be a good opportunity for that. Of course, there's some risk in that always, because we might get secondary short squeezes, but we can just double down, or we can work with stop losses. But in general, the trend is your friend, right? If something long-term goes down, we rather want to bet on falling prices. If something long-term goes up, we want to buy the dips. There's so much more value to come. You've only watched a small, tiny clip video. The entire episode is available over here. Just press here to watch the video.